Hey everyone, Eric Dutram here with the latest edition of the Dutram Report, the podcast on ETFs and more. Today we have another Dutecast where I'm giving you a solo report on a topic that caught my eye. This one takes a look at WisdomTree stock and how its mix of funds might impact things for investors in its shares, and how this could actually spell trouble for the company in the near term too. So if you have any questions or comments, make sure to send them in to podcast@zacks.com. Don't forget to find the Dutram Report on iTunes and give us a review there as well. But stay tuned for my look at WETF right after this. So WisdomTree, ticker symbol WETF, is generally considered by many to be a good proxy for what is going on in the world of ETFs for stock investors. And that's because the company is really the only pure play in the ETF world and was one of the most direct ways to invest in the ETF space until, of course, TETF came along to give broad exposure to the space. Don't forget to listen to that podcast either. But this is generally a good business to be in, and let's be honest, I might be a little biased. But consider the gross margins here, which are north of 80% for the U.S. business, and I don't think it is that unfounded to say this is a good business to be in. Additionally, ETF businesses are pretty scalable. By that, I mean costs are relatively fixed, and there isn't a linear relationship between additional assets under management and those costs. So the more assets you get under management, the better it ends up being in terms of the total revenues, and a lot of those revenues end up going right to the bottom line. So you might be saying, what's not to like? Well, sometimes issuers get way too concentrated in one type of product, and while this can be a good thing when the trend is in your favor, things do eventually turn, as we always see in the investing world. And we saw this reflected in the two all-star products for WisdomTree. Now, these are HEDJ and DXJ. HEDJ focuses on a hedged approach for the European market, while DXJ does the same thing for Japan. Now, these funds really put WisdomTree on the map, and especially DXJ. And the issue here is it really underscores how crucial good timing can be for the success of ETF providers and what happens if you really catch fire in the ETF world. Now, these funds have been around for a long time, actually both since at least 2009, but they really didn't catch fire until well after that. And by that, I mean, if we look at the flows from inception up until the start of 2013, and this data is from ETF.com and their great fund flows tool, we do see that HEDJ only saw $30 million in inflows, while DXJ saw a much more respectable $1.2 billion. Granted, a lot of those assets came in the last couple months of 2012, so really it didn't catch on for the large majority of its time on the market either. Now, things changed for both of these funds as the dollar strengthened and foreign markets seemingly were on a mission to make their currencies go lower. This type of environment is built for WisdomTree's duo, as both of the WisdomTree funds are hedged. Now, this makes them great performers, and especially on a relative basis when the dollar is strong and foreign currencies are weak. That is because hedge products tend to outperform unhedged funds when we're in this sort of market environment. So WisdomTree's funds were able to post some pretty solid numbers, and they were able to outperform their competitor funds that were in the same space but weren't using these currency hedging techniques. So, in many ways, WisdomTree became a pioneer in this space and more or less brought currency hedging to the masses. Now, this sort of approach was largely responsible for the surge in shares of WETF over the past few years, as the company saw gains of 200% in stock from the start of 2013 until mid-2015. Now, that sort of gain isn't too surprising when you consider the rabid interest in those two key products in the time frame. Once again, if we look to ETF.com's fund flow data, not too surprising when you consider the rabid interest in two of its key products in the time frame either. Again, if we take a look at ETF.com's fund flow data, we see that HEDJ from the start of 2013 up until July 1st, 2015, saw over $19 billion in inflows and was actually pretty close to $20 billion in inflows. And DXJ saw over $13.7 billion in inflows in the same time frame. Now remember, in all the time before this time frame, HEDJ only had $30 million in assets under management come into the fund, and in this shorter year-and-a-half time frame, close to $20 billion. So basically, investors really embraced this approach, and it swelled WETF's asset base by $33 billion in just these two funds. Obviously, this is a great situation for WETF, but the problem here is the dollar's not always going to stay strong, and eventually these sort of currency hedge products are going to face some weakness. And that's really what we've been seeing so far in 2017, as UUP, which is kind of a good proxy for the ETF world in terms of the dollar's performance, has lost about 10% so far in 2017. Now, you might say, who cares about this sort of currency hedging and why does it matter so much if the dollar is falling? But why would you buy a currency hedge product when the dollar is going down? Why not just use a regular fund tracking the same market like EWJ for Japan or EZU for Europe? Both of these are also cheaper than their currency hedge counterparts, so that issue has to play into people's minds as well. And it is really hard to understate the importance of this duo of HEDJ and DXJ to WisdomTree's product mix. And by that I mean, let's take a look at their whole lineup. They actually have 87 ETFs and $43 billion in assets under management. However, HEDJ and DXJ, out of those 87, actually account for about 40% of the total company's assets under management, respectively $8.7 billion and then $8 billion for DXJ. So basically, WisdomTree gets the same amount of assets from those two funds as it gets from 83 of its other funds. So they're incredibly concentrated in both those products, and those really drive the bottom line for WisdomTree stock. The company is incredibly concentrated in two funds that are increasingly out of favor with the market. Don't believe me? Let's take another look at those fund flows and see what has happened in the last year and a half for both of these products. Now, if we look from 8/24/2017 and we go back about a year and a half, back to February of 2016, HEDJ and DXJ both have huge losses in terms of their flows, almost $8 billion from the Europe fund and close to $4 billion for the Japanese fund. In fact, in the last 5 quarters, the two are 0 for 5 when it comes to adding assets. Now, it doesn't help that a lot of competition has come into both of these markets either, as investors have a number of other options even if the trends do turn around. For example, Deutsche Bank and iShares both have funds in these areas, including DBJP and HEWJ for Japan, and then DBEU and HEZU for Europe. So even if the trend does turn around, investors have a whole host of other options. So it's not like back in the day, if you will, for both of these funds when they were really the only game in town. Investors have a number of other choices, and that also isn't going to help these funds going forward. So not only have assets been sliding for both of these key products, but the competition is greater and the trends are really moving against WisdomTree and both of its key products as well. Currency hedge market just isn't what it used to be, and that's probably part of the reason why shares of WETF have slumped about 20% over the last year and a half. So what I'm getting at here is I think it is hard to like a short-term investment in WETF right now, at least with the current trends in the dollar. It's just going to be hard to attract assets with this hangover two of their most popular products and two that have the same number of assets as 80 of their other funds. Now, the company has done a great job of diversifying its product base, though, and we've seen some recent successes among some of their newer funds. This is especially true in the dividend market, as their dividend growth fund, DGRW, added about $300 million in the most recent quarter, while the mid-cap dividend fund is also adding a decent number of assets, too. In fact, 10 funds in the company lineup saw inflows of at least $50 million on the quarter, so they're definitely making some sort of progress. Now, their so-called core and strategic area, and then this focuses on their dividend funds for the most part, is up to about 48% of their assets from the most recent quarter, and this is a pretty solid move from Q1 2016 when it was just 35%. So they are at least making some progress in terms of diversifying their base a little bit more. But all these funds are really going to have to pull their weight if WETF is going to get back to being a strong market performer, and boy do they have some work to do. Personally, I don't think it's going to be quite enough, as none really have the potential to catch fire like DXJ and HEDJ did back when we saw a strong dollar and foreign central banks trying to weaken their currencies more or less. Both of those had incredible timing, and they benefited from a huge fall in expectations in currencies, and I just don't see the same thing happen in, say, mid-cap dividend stocks. So remember, timing is incredibly important for ETF issuers, and the timing might not be right for shares of this company right now either. Currency hedging is still vital to WisdomTree, and that story just isn't the sure moneymaker it used to be. So look for WisdomTree to continue to diversify, but for shares to remain tied to the currency hedging, and by extension, what is happening in the dollar in the near term too. All right, everyone, hope you enjoyed this solo Dutram report and my look at WisdomTree in greater detail. Make sure to tune in for more interviews and discussions on the world of exchange-traded funds in the future. And for my thoughts on the ETF world, make sure to go on over to Zacks.com, check out the ETF Investor Service, which includes my top picks and commentary on the markets. And don't forget to find and review the Dutram Report on iTunes. And if there are any other topics you want us to discuss, feel free to reach out at podcast@Zacks.com, my Twitter page @EricDutram, or leave us a comment on Facebook as well. But be on the lookout for a new edition of the Dutram Report each and every Thursday. But until then, for Zacks.com, I'm Eric Dutram.